Hi there, traders. This is Matt Krupski here at Chartered Financial Services, coming to you today on Thursday, September the 14th. While normally I talk about options, today we're going to be talking about next week's FOMC meeting. We have a meeting scheduled for the 19th and the 20th, Tuesday, Wednesday of next week. A lot of times around Fed meetings, you can see markets move quite a bit, especially if the Fed decides to raise rates in their attempt to kind of bring them back to somewhat of a normalized range. This meeting coming up next week, most analysts don't expect any sort of change in their target rate for Fed funds. However, they are looking at what their language is going to be in terms of buybacks, looking for them to reduce kind of the size of their balance sheet and let any sort of treasuries that they are currently holding expire, as opposed to buying more treasuries as those have been expiring, which is what they currently have been doing. So, looking at the futures markets, there's a Fed fund future out there. The nice thing about the Fed fund futures is it's really easy to equate Fed fund futures pricing with equivalent rates. The way you do that is you take 100, subtract it from the price of the future, and that gives you the equivalent interest rate. In this table, you can see, based on yesterday's settlements, what the prices are and their equivalent interest rates. So September 2017, traders are expecting rates to kind of be where they are, 1.155%. I think since they raised rates in June, their band has been between 1 and 1.25%, and it's been averaging right about 1.16% every night overnight. As you can see, looking at the October future, the markets do not expect any sort of change. The October and November prices are equivalent to the September price. So no one in the market is expecting any sort of rate change between now and the end of November. Now you see December, it pops up just a little bit to 1.21%. To 2018, you see March 1.275%. So you're seeing small rate increase as you go out further out in time, with the idea that the Fed may eventually start to raise rates again. Now, it should be also noted that in June, when they released their dot plot, they polled the Fed governors and they asked them what they think the final 2017-2018 rates will be. And for 2017, the average guess was between 1.25% and 1.25%. So that equates to a Fed funds price of about 98.62%. So if the Fed follows through with what they thought they might do and raise it one more time before the end of the year, you would expect December Fed fund futures to be more towards that 98.625. Meanwhile, December is only trading at 98.79. So as I said, the market does not expect the Fed really to raise rates. By the end of 2018, their average guess was between 2 and 2.25%. Would equate to a Fed funds, average price of about 97.875. As you can see, the Fed funds rate in December of 2018 right now, the market's only pricing in a rate of 1.44%. So they are, 50 basis points below, at least below where the Fed thought they might be. So the market doesn't believe the Fed, is what this is telling me. Again, we've got a meeting Wednesday, we've got another meeting at the end of October into the 1st of November, and then the final meeting of the year is December 12th and 13th. So there's 3 more meetings before the end of the year, and yet the market says, I don't think you guys are going to raise rates. If it's me, I would be out there taking a position in November or December Fed fund futures, taking a short position. Again, as prices go lower in interest rate instruments, that equates to a higher interest rate. So always remember that. Of course, if something happens to the economy, they have to cut rates, that position could go against you. But I don't foresee that happening, with stock market continuing to make new highs, inflation in line, a little bit below where the Fed wants it to be. But again, CPI this morning was a little bit hotter than analysts expected. So CPI starting to pick up, and everybody knows unemployment is doing great for the economy. So if you don't want to trade futures, there are options instruments out there that are available to you. Options in Fed funds, not super liquid. I probably wouldn't recommend it. However, the CME Group has listed weekly Wednesday options in both treasuries and stock indices. So these are options that expire on the day of the Fed meeting. So the Fed meeting will come out and then the options will expire. So that's a great way to take advantage of it if that's what you're looking to play. Again, weekly Wednesdays in the treasuries and weekly Wednesdays in stock index options like the S&P 500. One way to look at it if you're an options trader. So any questions, don't hesitate to hit me up on Twitter, shoot me an email, give me a buzz. I'd love to hear from you. And as always, remember these are my thoughts, not those of ADM Investor Services, or Archer Financial Services. Thanks, and have a great day.